Guys, so it's another day here and let's do it. So today we are going to go ahead and look at a lot of good stuff. I'm looking forward to it. The markets are just about to open. Let's do it. So today we are going to and so let's see here. I think I got some reverb going here. Let me fix that and we should be good. Back to it. All right. So, like I was saying, the market's going to be opened up pretty soon. I'm looking forward to looking at a lot of things live here today. And so, thanks for jumping in. If you're here already, we'll wait maybe about 2 or 3 more minutes for a few more people to jump in. But I'm excited because crypto's been balling out, man. Like the last week and a half, things have been pretty good. So there's the question: is this just a relief rally for fools that are thinking that things are just going to keep skyrocketing, or are we going to hit a turning point? And so we're going to look at some big macro things that may affect that. We got Tesla, they're doing their earnings on the end of the day. We're going to look at some other companies that are going to be coming with their earnings next week. So this stuff all affects crypto. So large stocks, these are the things that keep the stock market going, especially US stocks within the SP 500. So with that being said, we got to keep tabs on them. So that's Apple, that's Microsoft, that's Amazon, and obviously Tesla, like I mentioned. So as we continue on this journey within crypto, being able to understand how markets move is super, super important. And that's why I've kind of, took the job of helping people understand this, because it took me a while to get this understanding on, well, what makes the market fearful, what makes the market greedy, and then at the same time, where does liquidity like to sit, and then how do these institutional buyers operate? All this stuff is really important. And so, yeah, I'm looking forward to jumping into this. I think we're going to have a good one today. We got Wade in the chat. What's going on? Hope everybody's doing well. And like I said, today's going to be a good one. Let me see here. Da-da-da, da-da. Yeah, so I think at the end of the day, for me, this is why investing is so exciting, is because it's a learning journey first and foremost. I think at the end of the day, every person decides, how their financial life is going to look. And ever since I was a kid, I always knew that I wanted an opportunity to grow in many different ways, and so literally and in many different other senses. So when you commit yourself to learning, whatever it may be, that's how you get the best results. And so I have a lot of people that come to me and they have a slight interest in crypto, but then they have an, I would say, an outsized look on hoping that everything goes extremely well with a slight interest. And my thing is, I always ask them, well, what do you look like for you, what does it look like to spend some time trying to learn this? And for most people, they either don't have the time or they don't have the want to learn. And so what I always encourage anybody is, if there's something that you expect to have a good outcome for, don't, like, literally do not be bashful on spending time on learning whatever it is, because that's how you get the most fruit of it. Like, that's how you, like, when you plant the seed, right? Don't just plant the seed and not water it. So in this crypto game and investing, watering, what does that look like? It's learning continually about whatever you're doing, whatever the investment is. And so, that's what I really like to do, but then also do it live. So as I learn, I could share this stuff with you guys and we can all help each other out. So especially here in the chat. So we got Bubba Dubs. What's up, man? Hope everything's well. But yeah, like today is a good day thus far. We got BTC up above 23K. And let's see, man, because if we get a nice couple days here to round out the week, who knows? We could be touching that 26, 27K by the weekend. So let's find out. So let me share my screen and we'll continue on. In the meantime, make sure you guys, like, I'll say this, I'm not trying to give you guys any advice personally, but for me, one thing I know that I'm doing is making sure I'm spending some time just relaxing, getting away from the markets, not really too concerned about it all day, but spending a good amount of my day focusing in and making some good decisions here. So just wanted to give you guys that reminder. So let me share my screen and we'll get this thing going. So cool. So I'm gonna come at it from a different approach today. So as the markets are opening, this is something that I always do is I pull up the futures market and specifically for the NASDAQ. So this is the M&Q, right? These are the NASDAQ minis futures contracts, which, I've done some trading here and done it pretty successfully, but that's not the focus today. But we're going to use this as somewhat of a leading indicator because as we know, we always talk about lagging indicators. Like, I mean, really the plot of a chart is somewhat of a lagging indicator, but the futures market is interesting because it's a derivative of, of stocks, right? And then so this is people gauging, where do they see the NASDAQ going? So this is kind of why I like looking at this, especially at the beginning of the day and kind of zooming in here. So as y'all can see, we're on a 30-minute chart. And this is a lot of times how I really get started. And as we see this price movement, one thing that I've been able to see through time, especially for the month of June, is we've kind of had this area right here. And then so just getting familiar with these numbers may be a little bit new for the people that are, more so focused on crypto. But right here at about like 12,200 for the MEQ futures contracts, this has been an interesting line because we use that support here, here. Once again, broke through it, support there, use it as a little bit of support before breaking through it, and then use it as resistance multiple times. Now we're coming back on this line, and this is going to be very interesting because, when the market opens here and we got about 7 minutes before that happens, we're going to start seeing volatility. So the first hour of the day, so we'll kind of check back in on this periodically throughout the stream, but the first hour of the day is a real big indicator on what the futures market is doing. And then the futures market is a real big indicator on what the NASDAQ and essentially what the tech sector of the stock market is going to do. And so that's why we pay attention to this. So we're, like I said, we're zoomed in here on a 30-minute chart. And so a couple things here, check the RSI, and we had a big day, obviously, yesterday. And so you can see, check that volume in. All of these bars here are green except for one or two. So this is like, hey, stock market, the futures market is saying, hey, they're liking what they're seeing from a lot of these companies' earnings not being as bad as what may be priced in. So we're getting those adjustments coming back up. And then so coming back here as the market opens, typically you have somewhat of a fake out. That first 10 or 15 minutes, you'll see price either move one way or another, but then you'll see it declare a certain way for the first half of the day, and then maybe we'll see somewhat of a shift in the evening hours while the stock market is open. But generally, we have a one clear direction for the day. So, for example, on the 22nd, or I'm sorry, so this is the 18th. This was the declaration for the day. It came out, did its thing, and then the day was negative, and then the following day. So, and we're just looking at these bulks of volume right here. This is how we can tell. Then the second day declared and we came out, and you could see that volume kind of trends down, but you can see what is the plan for the day. And we want to put a few hours together to really, really get a chance to understand and see. But as we can see, we're going to use this support level and really say, hey, if we come down, maybe get a little fake out support here, but then we come back up, there's a good indication that we're going to have some positive price movement for the futures market, and thus also positive price action for the tech sector, like I said, which equals positive price action for crypto. And then so that's how we can get a good idea early on in the day for how things may be turning out. And so this is super helpful. And I've been doing this here for a good like 6-7 months, and it's really helped me kind of position myself early on in the day if I'm looking to maybe say, hey, I'm looking to get into a position and for a buy and hold type asset, right? Or it may be something I'm looking to trade, but more so we'll be looking at more so buy and hold stuff because I think that's how you really get the butter from the duck within crypto is buying and holding it long term. But one thing that I do want to mention here is really learning to use this volume profile, and I put it here on the left side just so we can see the price action a little bit better. And so let me do this really quickly. We're going to make that a little bit larger. And so the volume profile is really great, guys. I'm hoping that we can really understand the use case of what this is, and it's really meant to help us understand this particular asset. Where did people want to step in and exchange it, whether buy or on the sell side? And so these are different price levels of people either holding still currently, but then, like I said, people said, hey, these were attractive levels to either sell or buy. And then a lot of times, this is where price likes to run to and settle in these liquidity pockets. And so this volume profile is super important because it can give us another, I would call somewhat of a idea to be able to give a good estimate about where price action could end up settling. And so as you can see, we got a big, nice U here, a nice pocket to the upside, basically saying, like I said, if we get some support here, now that we've broken through, we get some support here at this 12,200 range, and we get a nice couple hours at the beginning of the day, there's a good chance that, and I've done a marker here, that we come up to 12,500. And so, that's nice. That's a nice solid 200 points. And as you can see, you're going to see this volatility as I'm talking here. You're going to see this ticker move up and down. This is one of the fastest moving, I would say, assets early in the morning. And so we'll see the direction and the declaration of where we're trying to go this morning. And so jumping in here on the 30-minute chart is very helpful to see that. And so I say all that to say, we're getting to be a little underbought. We're right here at this midline. And so let me kind of make that a little bit bigger. So we're right here attacking this midline. And what we'd like to see is crossing this moving average, this yellow line here, and hopefully going to attack the top of this metric here once again. And then same thing with the MACD. We are, we've had some bearishness, right? We had a night, and mind you, this is a 30-minute chart, so this is a lot of back and forth, right? So like I said, but overall, it's interesting because we had some cool down here, and then so as this kind of goes a little bit smaller with these bars, we're starting to invert and come back to the other side to the green, and then so that's obviously positive for price action. So we'd like to see is these moving averages curl and turn around and go back to the upside, and so we'll be seeing that. Whatever may happen. But nonetheless, I'm hoping everybody got a chance to really get their dollar cost average in, and that would have been earlier this month. And I was saying some things like that here on the channel, and that's what I was doing currently at the time. For me, I was able to snipe some Bitcoin under 19K and also some Ethereum under $1,000. So that was great. And Ethereum's been a great return thus far the past week and a half. And so that's just the MEQ. And as we can see, we're just about to get going. And so we'll check back here in a second. I do want to take a look here. Here's another metric that I've shared a couple times, and I'm gonna get back to it. And this is the PCC. So this is the options market. So now we went to futures. Now we're looking at options. These are both derivatives. And so one thing to understand here is these dates, right? So what we notice is when this metric starts to get to the upper bound, so to this white line, to this dotted yellow line, and especially if we ever get up to this green line, this is what fear in the market looks at, and this is what gets priced in. And then so what did we see? So for COVID, for example, we had a moment where we came up, right? We tapped this white line and then we came back down. And so this is saying, hey, there's a lot of fear in the market, and this vice versa. If we ever get to this dotted yellow line, this is like saying, hey, you probably want to think about taking profits. But a good barometer for me is like saying, hey, I'm a DCA when we're close to this white line, to this dotted yellow line. And you literally don't have to time everything perfect, guys. Learning the ebbs and flows of how markets move is how you can legitimately be a savvy investor. No guessing, but understanding, right? And then so the times where we get very high on this metric, if we were to go back and look at the Bitcoin chart or even the chart for the S&P 500, we'll notice that these are local lows, guys. This is what it looks like. So I know you guys can, do a little bit of remembering on just dates, right? So if we look at particular dates, right, and we look at that, and this is on a weekly scale, let's go ahead and look at on the daily. I think that's a little bit clearer, right? And then so same thing, COVID got us up here to this green line. Once again, here we had a period of time in December 2018 where prices were on a nice discount. But even recently, if you look at the times where we had like that crooks in the market, I know you guys remember that period where we had, mid-May, so early to mid-May, where we had a big decrease in price, then we had a rally. The same thing again here. So this was June 16th and 17th. So go check the Bitcoin chart, and we'll do that here in a second. We had a nice local low. Then what do we have? We had a rally since then. And then so that's what we're looking at. And a lot of the times when we do cross this blue line here, we do have a little bit of a sustained rally for a moment, or it could be for quite a bit of time. But nonetheless, one trend line that I'm kind of noticing here is that we are in a bear market, right? Because the rallies, if we do have them, are becoming less and less and less, because the bigger the rally, the more the bullishness, the more greed that there is in the system. And then so we've been declining on that. And so I don't know, it looks like, hey, we could potentially turn around on this metric. And then so, like I said, this is a leading indicator saying, all right, this is getting priced in the options market. In the actual market, right, that has the bigger stake of where the liquidity is, we may see that move to being a little bit more fearful. And somewhat seeing that a little bit on the crypto charts as well. And so we'll look at that here in a second. And so, that's the one thing that I want to highlight, is just utilizing these other metrics that I know a lot of people aren't really talking about. I don't know if too many people know about this stuff, but I've been trying to plot this stuff out in an easy to understand way so that we can all take advantage. But yeah, it's just like, I'm trying to do my best to just let people know, hey, when we're getting high, so especially when we get to this white line and this yellow line, if we ever get back there again in the future, I'm going to be letting people know, hey, you want to be thinking about allocating to assets, especially in my book, crypto, in my opinion, not financial advice, is because when we even get back to this midline, this blue line, there's exponential gain. And so we've seen that just with Ethereum from this point to this point. We've seen 50 and 60% gains within the span of a week and a half. And so that's a great thing to see, great thing to be a part of. And that's how the money gets made. And whether you're a swing trader or you're an accumulator, right? I have a trading account that I do some swing trades on. So that was great for myself, but also I added some to my long-term hodl bad at these points here. And so, because to me, I seen these points just as a great opportunity, like COVID was, like how things were back in 2018, and stuff like that. And so, learning to see these metrics are really important, and we can all see. And like how I have these green lines here, I've showed it before here on the channel. These green lines were local lows for the BTC price, and thus local lows for crypto. So now that we have that under the saddle, let's jump into Bitcoin, and we'll look at BTC for a second. And so I got a couple things plotted out here that I think are going to be a great topic for us to talk about. And this is this FOMC meeting. So let's kind of get that in frame. So Bitcoin is no longer a couple of dollars anymore. Now we're dealing with tens of thousands, right? And then so opportunity cost, guys, I'm always talking about it, especially for, and I'm a big believer in alts, guys. Like, I really believe that some of these alts have a lot of things to offer, and then people jump on that train. So are you going to be able to jump on that train before other people? And that's all the movement of liquidity is, right? Are you going to have an asset before somebody else? It doesn't matter if it's a stock, if it's a piece of gold, right? Whatever it may be. When values go up, other people want that asset no matter what happens with it. So I can already tell that we are attacking. So as the day opens, we're heading up, and it looks like we're going to be able to touch that 24K, and we might do it live on stream. So that'll be nice to see. But I have a couple things plotted out. So let's kind of get orientated with what we're seeing here. Same thing with the volume profile. We have a nice open valley right here. So that means, hey, price does not have too much resistance to get up here. And a lot of these charts look like this, whether you're looking at some tech stocks, whether you're looking at the S&P 500, like we did here on the futures chart. We've seen that, there was this valley here. So a lot of things look very similar alongside with this ascending triangle, right? And then so we've broken through. And so as I'm kind of talking here, so these aren't 60-day cycle tops. I'm going to try to do a good job of explaining what I'm looking at. So as we all know, we are in a macro downtrend, a macro bear market for BTC and crypto. So a lot of the alts have been hit pretty heavily, but same thing on the way back up, right, they fly, especially when the market dominance is down for BTC, like how it has been over the past couple of days, really. And so here's the interesting thing is, so these yellow vertical lines, these represent the FOMC meetings. And so typically what we've seen is, the week beforehand or a few days before, we see price get immediately attracted to the downside. So you see these big, large candles with price moving down, somewhat of like a little capitulation. Like so here, especially the days beforehand, people pricing and getting ready for that rate hike. And so what they're kind of talking about in recent time is rates hiking potentially up to 100 basis points. And so that's 1 percentage point in any, I guess you can say, any and every type of loan that people can try to get. So whether that's a mortgage, auto loan, personal loan, expect another percent hike potentially. That's what people are talking about. But also what people are saying is somewhat of a given is 75 basis points, which is not as bad, but it's pretty high, guys. And so when you see rate hikes this exponential, so this quick, this means the cost of money is that much more. And so this has a major effect across all markets. And then so what happens is, as we can see, like even events like this and some other reasons, right? So we see these large green price, or I'm sorry, large red price ins before this date. And so the interesting thing is coming up on where we are today, and boom, we've already touched 24K. So win for investors, right? So like I said, investors, you could have chose the beginning of July or the middle of July, a win for investors who've been a part of this run. And so yeah, like I try to do my best to let people know what's going on and how to take advantage, right? But like I was saying, it's doing the exact opposite. Like even though we're in a macro downtrend, we've had these relief rallies. And so typically what we've seen is these relief rallies have been the day or a couple days after, right? So the day or a couple days after the FOMC meeting. So like here and like here. And then here we stayed flat. But here we have another situation where we're getting a rally into the meeting. So that's going to be very interesting because on this day, there's a couple options. Either we adjust, right? Because as we see on this daily chart, we have a lot of the strength already getting to the tip top of this metric here, attacking that 70 mark. And so we may say, hey, we come up, we ball out, and here's where the resistance is, or somewhere before that, and we come back down and recalibrate and see where price falls to, and or we keep it going. And then so what I'll say is this is a higher risk point because there's no way of knowing exactly what's going to happen. We're just going to have to react and see what happens on these particular days. And that's why you use these metrics, right? So you use these metrics, for example, here and here when we're below the RSI, under that 30 portion, to do your investing and have confidence, let the price come to you, right? And then so the gains came to us because we were positioned well beforehand. And then same thing here. Here's a higher risk level of you trying to decide, oh, well, let me FOMO into the market because, yeah, price, a lot of the times it turns around right after you had an exponential gain like here, here, and here, price turns around and corrects. And then so being a savvy investor that allows you to see this beforehand. And so, this is interesting because this is, like I said, different than what we've seen in prior months. And so, one thing I do know is gas is going down, which that is one of the biggest parts of inflation. We're still going to be looking at energy and see if we can get that to trend down as well, amongst other things that are kind of keeping us at an elevated inflation rate. Because I really do believe, once inflation could really get a better narrative. So, because we know that these metrics that the Fed kind of looks at to let people know, hey, here's where things are at. There's narratives that they're trying to paint, and then thus, when there's a certain topic on people's minds, right, and it's a topic that seems to be bad, and it is tough for a lot of people when it comes to the pocketbook, and we're spending money out here and stuff like that. Things just cost more. It affects everyone. But as soon as the narrative can change, where inflation is not just the spicy topic that everyone's worried about and talking about, I really believe that will be relief on markets, even though it may not be back to the 2% of what the mandate is for the Federal Reserve. And so with that being said, BTC, looking pretty decent this morning. And then so what we'll do, we'll check back in on the MNQ. And like I said, we're getting a good indicator, right? You see this right here, this volume coming in. The day is starting off green. And so that's going to be interesting because if we can see this, typically we'll see, and we're only halfway, this first bar, we'll typically see this point to where it gets pretty high up here. So there's a good indication, right? This first day, this first hour, is that we'll be attacking to the top of this metric, or I'm sorry, the top of price action with no problem. So we'll come back to it here, maybe in about 5-10 minutes. And then so really quickly, let's take a break. I'll check the chat and see what you guys are talking about and what you guys are doing. So cool. Yes, we got some people. What's up, Navin? Nice to see you. Glad you guys are here live so we can really dive in. We got some good stuff here. Cool. Let's go. Pamp it. Pamp it, pamp it, pamp it. Okay. So Bubba Dubs saying this is important to hear. Most people don't know that it affects car loans, credit cards, and personal loans as well as mortgages. Yeah. Anytime the Fed does something, it affects every single loan out there. So people that are looking to get a loan, not people who actually have loans that are fixed already, but people who have variable rate loans, so variable debts, and people looking to acquire new debt. All of this stuff matters, and so it's a good thing to track and understand. And as we go, we could see how this affects markets. And so from here, let's get back into it. So I do want to hop in some other stuff, which I mean, like I said, I got a lot of nuggets here, and I think it'll benefit everybody watching today. Really quickly, if you guys haven't, smash that like button, hit the subscribe button, and I really appreciate you guys tuning in live because I'm trying to really grow this thing so people can not just only become more knowledgeable, but really take advantage of these opportunities, right? Because there's finances that could really be used if you know how to use them. And so I'm hoping everyone is able to get their personal finance right first and foremost, be able to save a little bit. But when you have that discretionary income, utilize it to your benefit to help yourself later on. And that's what investing is all about. So let's take a look at Ethereum. And Ethereum doing a lot of good stuff here. And as we can see, it's attacking that high from yesterday. So there's a couple things that I'm kind of looking at here for Ethereum. And as we kind of look into things, right, we've busted out of this parallel channel very nicely, and we're already, like I said, so we're attacking a crucial point that I think is pretty interesting. Is so this downtrend that we kind of seen Ethereum on macro wise is coming up to a point to where things could be very interesting. But I'm thinking that's going to coincide with a couple things though, where I think I'm thinking Ethereum may be losing a little bit of its engine, a little bit of its steam coming here. So right here, right, as you can see, we have this valley. So I would say we would have a good chance if the stock market opens up pretty good in the next 3 or 4 hours. We have a good chance of hitting that $1,700 Ethereum. But that also comes right into a big wall right here. You can see that in the volume profile. So it's going to come into a big wall, especially right here of resistance. And so, but that also coincides with this area here, right, of this macro downtrend to say, hey, we may see this thing slow down, but you never know. Crypto can be very surprising. Markets can be very surprising. So if we broke through this, but I'd venture to say we'd probably at best within the next week settle. If we are going to be bullish, if we do break through it, the most that I would see Ethereum doing within the next week or so would be, in this range here of this cluster. So somewhere in here, and that's like the best case scenario within the next week or two. Because like I said, things are like waves. When you have something rush in so quick, it's gonna retract and rush down at least a little bit. And so that's kind of what we may be seeing here for Ethereum. But it's been great, right? Getting that Ethereum under $1,000, right? So you've had an opportunity to get a nice 60% on your capital, and this is, like I said, in a week and a half. I don't know too many asset classes that can do that and be fully liquid for you to take advantage. And savvy investors, right, on a nice swing trade, you can take that profit, right? Being the fact that we can see these things, right? We can see what's going on, take a good portion of that and then wait for things to kind of come back down, settle, get below this metric on the RSI. Same thing here with the MACD, where we're nice and green and positive. Take it while we're in the green, in the positive, and let markets do what they're going to do. We know markets are going to go up and we know they're going to go down. So let markets kind of come back down, retrace, and then get a better buy-in to keep accumulating this asset. So you can do this for profit for USD, but I personally like doing it for profit to accumulate and grow more of my bag for that asset. So this is a way where I can gain more Ethereum by utilizing these ebbs and flows. And it's just solely learning how to look at a chart, but then understanding what's happening in the macro. And then so, Ethereum's doing this thing, but we're coming up on a point of inflection here in between like the $1,600 and $1,700 Ethereum. So we'll keep our eye on that. But, typically, when we get to this high point of this metric, we start to fizzle down and then we at least come back down to this midpoint at some point in time. And so we could see that plenty of times, like so point here, right? We come back down because we hit the top of the metric. Obviously here we had some divergence, which that was interesting, some bullish divergence, but same thing here. You look at the top of the metric, right? We stood up here for, a little bit of time, about a week, but we came back down. And then, so it's just a thing to look out for. Not saying that's going to happen, but this is how markets move. And this has been pretty exponential. So, yeah, Ethereum's ripping. So let's kind of move on. I do want to look at a couple of things within, I would say, the traditional sector. So we're gonna look at a couple of things here on Twitter, and this is how I kind of keep tabs on what's happening in terms of earnings for companies within a week. So here at Earnings Whispers, we can check here on Twitter, and we had Netflix come out yesterday saying, "Hey guys, it's not as bad as what people think." They did lose subscribers; they lost about 1 million subscribers, but people were pricing in 2 million. So that's why we've seen their stock do a little bit of a nice jump yesterday and even today. And so today after close, so not early on, but we have Tesla. Tesla basically going to be coming out here and seeing, are they going to be able to produce more cars and get them shipped in the second half of the year? And so that's going to be something interesting, but we're going to see, their earnings and see how that was. And if it isn't as bad as what people are thinking, that'll most likely be good for the stock as far as price, people having confidence. And so, we have a couple other big companies coming up this next week. So let me check my notes here. So we have Microsoft coming. We got Amazon coming. We got Apple coming. Apple's going to be the big one because we know Apple is one of the largest companies in the world. And so they have a big bearing on the whole total stock market. So if they're doing good, that's going to be another positive thing. And that's going to be interesting because that's going to be after the FOMC meeting, right? And so I think this week and next week, 2 big weeks for markets. So if you're not paying attention, you may lose out on being early on the trend and price swings. And so my thing is having all the information that we can, so that way we can react and look at the data and pick our spots to do well in the medium term and in the long term, and yeah, even sometimes in the short term as well. And same thing, we got Twitter coming up, so a lot of tech stocks, right? So as we see these tech stocks and they're coming out with their earnings, like I said, if they're not as bad as what people think, that's actually a net win for crypto as well. And so, in the banking sector, so Goldman Sachs, Bank of America, Charles Schwab, they actually did pretty decent on their earnings. And so, things are not looking too bad right now. But another thing that I do want to take a look at is there's an article. So Bank of America, they have a nice team over there where they're doing a lot of just data and information on sentiments for overall markets. And so this is an interesting part, right? Because as we have this relief rally, they came out with this a day or so ago. They're literally talking about things being very, very bearish, and this isn't just crypto, but across all markets, in terms of the amount of risk people are willing to go into assets with. People are very risk adverse right now, basically saying they don't want any risk at all because they've been beaten up by the market, right? And that's why risk assets, right, have come down quite considerably. But we are at a point equal to where we were in 2008, a financial crisis. And, who knows, we may not have even, gone to the depths of a recession quite yet. So this is interesting thing to see is because people are overly bearish right now, and it's clear to see. And then so, like I said, going against what most people are doing generally puts yourself in a good category because people aren't looking at metrics like this. Most people don't know this stuff. And so as we can dive into this information and understand it, right? This is how we go against the grain. And because here's the thing, 90% of people probably don't do that great with investing. 10% of the people do very, very well. So I know I'm a part of that 10. I want you guys to be a part of that 10. And this is how we get there, is about understanding stuff like this. And then, so a key thing to read here: the final painful stage of a bear market for investors is considered to be the capitulation phase, where investors begin to panic sell amidst overwhelmingly negative sentiment. And so, that's what we've been seeing across markets is capitulation, small capitulations. And I don't know, we may see one more, but that's not going to stop me from DCAing at these levels because I see value here already. I'm not going to wait and try to pick one particular spots. I have some dry cash ready to go if we do get there. And then so that's all about creating a strategy, but that's an if, not a when. People always need to remember everything in investing is if this, then this, not when this, I'm going to do this, because there's no guarantees in anything, right? There's no guarantees for most things, I would say. And then so just understanding value, that's the biggest thing that I really want to try to speak of as we continue to look at these things. And so, yeah, the sentiment obviously is pretty bearish. I do want to go look at why, people are starting to come back to the markets. We're seeing a little bit of this rally, and a lot of it has to do with people leaving the dollar. So as we look at the DXY, so let's look at that, and we're going to see a nice pivot on the dollar. So here's the interesting thing is, I still think, there may be an upswing back up here at some point in time because we've been in this channel. And so until we, do something different and prove this theory otherwise, I think we'll be in this channel for some time here. But nonetheless, in the short term, yeah, as the weeks go by, we may have an opportunity to let the assets, like I said, kind of come back, get a little relief rally. But we're still going to see that. But some metrics here on the MACD, we finally seen this flip red, so that's nice to see. And then also we're finally attacking down off the top of this metric, and we're coming to the lower part. And so as we can see the same thing with price action. And so the interesting thing is, this median line is always important for any parallel channel, saying, hey, we've crossed it, we've breached it. We've kind of come back up to try to see if we can get back above it, but it got rejected. So what we'd like to see is the dollar continue to come down and form a nice local low here. And that'll allow assets. So the people coming out of the dollar, institutions coming out of the dollar and looking to put it back into some, risk on assets. But as you can see, this is not a full-on bull market. I will say that a full-on bull market is more exponential through time, right? And so it would be through the months is where it's just like 75-80% of the time we were going up. Right now, through the past couple months, it's been more red than green, but in the past week and a half, it's been all green. So like I said, this is what we call a relief rally, not necessarily a trend change. And so it's clear to see and understand that difference. And then we need to see more data, more price action consecutively to really start to establish a trend change and get past certain levels on particular charts. And so for Bitcoin, I'd say we really need to really get back above 35K to really start to say, okay, I don't know, there may be a trend change. So we're just not there yet. And so if we put this on the weekly chart, and shout out to Cultivate Crypto, we'll turn on this algo. What we've seen here, let's see here. We got a sell setup. And then so for this next week, like I said, if we continue to be bearish, we're going to see that sell. And so this is not, saying, hey, you need to come in and sell this asset, but nonetheless is like an idea of this asset going down and that'll be good, like I said, for risk on assets. And so I think we can get a better look at it back on the daily. And so there we go, right there at the top. Boom, we had this confirmation right here. And then, yes, we've had a nice 3 days of going down with the dollar. And so let's continue to see. Hopefully, we can get to the bottom of this channel. And I actually need to fit that just a little bit better. Let's see here. Can I fit that better? I can. So I'm going to fit this a little bit better. There we go. A little bit tighter. And then so, let's see if we can get this thing to come on down. That'll be great. And so, I think things are doing okay. I'm not going to say things are going to be like this for the next month, but as we can see, we're doing okay. And like I said, being ahead of the trend is how you get the money, how you get the profits, how you get the guac, the moolah. So what people are here for, especially within crypto, is to accumulate and get their bags bigger. And then so let's head, like I said, head on over to the MNQ. And so, like I said, I'm hoping you guys can now learn from this and continue to use this, because like I was saying here, we had that wiki scene price get up to this, and that was saying, hey, this is what the market is deciding to show us. Now let's see if we can get a continuation. So we've seen price action get back up to where it started to peter out, and then price kind of came back down. So this stuff is volatile. So we've seen price move up, a good amount, 150 points, and now it's kind of come back down, that volatility. So let's zoom in here and we'll take a look, take a gander, and we're gonna see, and we'd like to see green, 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 right? So there's that volatility, that first wick, and then now that's turning red, and then but we'd like to see that turn to green for prices to continue to go up. And then the thing is, if it doesn't, then what can we expect? We can expect asset prices to start moving down, right? And then so that may say, hey, maybe today isn't the best day to start to FOMO into a market. And so that time to be, trying to get into the market, like I said, would have been previously earlier this week. And so, and we'll just watch, right? And then so if we come out green, like I said, there's no clear resistance till we get to this level here. And so, but things are rolling over. And then what do? I can also come on here and look at this on the 1 hour chart, get a little bit more information there. So same thing, things are, still overbought here on the hour chart, and then kind of coming back down. So we may do a round trip, come back down to the bottom of the metric for the RSI, and then boom, let's go look at the 4 hour. So looking at it at multiple time scales can really help us. And then same thing here, the 4 hour is pretty overheated. And so, yeah, you look at the confluence and just see, hey, where are things at? And like I said, things looking, over the past, 6 hours, things are looking like they're petering out here as well. And then so across markets, things are losing a little bit of strength. But nonetheless, like I said, it's just taking an objective look, and then that's it. Go from there. But today, for me personally, is not a day that I will be buying. It's up to each individual person. Like, for example, if you haven't bought in crypto since prices were higher, so let's go back to the BTC chart. And so this is, like I said, take everything with a grain of salt, because everyone's situation is different. Now, if you've been DCAing, through the past couple of weeks, I'd say today is not a particular day to where you'd want to be buying a whole lot. But for example, if you haven't bought in crypto since Bitcoin was back at 60K, then yeah, I'd say today would be a decent day to lower your cost basis. And then so that's different for every investor. And whether investing in alts or BTC, whatever you have faith, that's going to be able to make it through a bear market and come out on the opposite side of a bull market with use case, adoption, product market fit. And so, like I said, this is one of the things that we'll continue to track really going into this date. But as you can see, even this on the daily chart is looking to get to the top of this metric. And so I don't know. I think us getting extremely bullish, if I'm being completely honest, it's going to be pretty tough getting back to this 27K range. It's looking like we may start to fade out. But who knows? I may be wrong. But nonetheless, same thing. If we're using the algo on the daily, like I said, another shout out to Cultivate Crypto. Same thing. This algo helped us out in knowing, right? So using our eyes first and foremost, but also saying, hey, we got a good buy setup and confirmation here. And then a second chance if you didn't that first time, right here for BTC and a lot of these other assets. And then so even for BTC, we've seen a nice gain, right, of 15% in the last couple of days. So that's pretty good. So traditionally in the stock market, you'll be lucky if you get 15% in a year. So we got that in a few days, within crypto. And so that's why we are here, because we understand the difference. This is where, you can really do some life-changing things at an accelerated pace financially if you hone in, if you understand what's going on. And then so if we do a quick little TA here, we've breached this level here. We've breached this amount of resistance here. We've started to attack this next level of supply. If we just do Fibonacci retracements, right, and invert it from here to this bottom, right, where does it say that we have a good chance of tapping out? Right, kind of where we're at, this 1.6. These are levels where price gets attracted to. And then so, we could see a portion throughout the day where we come and tap it, but I don't know if we'll close here. But nonetheless, we could see that 24.5 area be hit today. And as you can see, right, all this thing is confluence. This next level is at 2.6 right here where the next target of resistance is. And so, yeah, this is where I would see Bitcoin either phasing out and starting to come back down for the next opportunity. But, like I said, this is what we'll wait to see through time. And then, so same thing here. We'll check a couple other things. This 12-day moving average, we're back on top of it. And, as we look through time, we've been using it as a resistance, right? So here, we kind of got on top of it, but we didn't sustain it. We fell below it, and it's been resistance, here. We kind of just threaded it. So, we'll look to see if we do come back down, right? If we do curl back over, if we can use this as support, that'll actually be a good sign, especially after the FOMC meeting. Like I said, so we're putting all this information together. If we have those larger tech companies saying, hey, things aren't as bad as what people are pricing in. Hey, things are going to be okay. We're going to do this in Q3. We're going to do that in Q4. And they're giving out that positive narrative. We could see, this 12-day EMA be used as support and have a very decent, Q3. This is something that, there's been a lot of things that have kind of come down pretty tremendously, Bitcoin being one. And then so relief rallies are in the game, not saying that we can't come down lower, but just as you can see, a nice relief rally even to 27, 28, 30K would be nice for the month of July and October. I'm sorry, I skipped all the way October. Where's my mind going? I'm talking about July and August, and we'll see what September looks like, the closer we get there. And so, that's pretty interesting. Cool. Let's take another break. Let's head over to the chat, see what y'all are talking about. Okay, so we got Journey to the Void. Hey, I like that name. Pretty cool. So can you explain bullwhips? I would like your analysis if you have the knowledge on it. So bullwhips. Yeah. So, these are these whipsaws that we see where, and it's interesting because I get a good idea of how most people think, because I have some people, that come to me and ask me a lot of things in regards to crypto. And typically they kind of have these questions more so after price has already done an exponential jump. And then so a bull whip is like when these people come back in at the top, and then it's just like, nope, the institutions, the savvy investors, they're, swing trading or, day trading, whatever they're doing. Now they're pulling profits. And so these new people coming in are getting whipped out. And, unfortunately, they get the short end of the stick. And their option is to hold through time, or what most people do, they sell because they don't really understand these ebbs and flows. And so generally just the whipsaw is just when people are like, yeah, we're bullish, but the macro trend has not changed. And then so when you get oversold, even in a bear market, you can still have a retracement back up, but nonetheless, you're still in a bear market. And then so price is still inevitably going to go back down. But like I said, there's these opportunities to add to your HODL bag if you know how to look at these markets in this way. And so I can give you an example of what that looks like here back on the Bitcoin chart. So we're going to share the screen again. And then so for example, right, that whipsaw is, because you have liquidations, right? Where like this is liquidation when you have these large candles, right? They're sell to liquidation. Like this is a lot of liquidation stuff. These big red candles, a lot of this stuff is liquidation here. But the whipsaw, for example, right? Something like here, it's just like, yeah, we're coming back, where this macro trend has clearly shown, okay, this is the beginning of price being pretty bearish. Now we have this up and down with liquidations, and then boom, we're coming back, but then people get whipsawed. They're in disbelief that we're in a bear market, but price is still going down. Same thing here. We go sideways. People kind of using this period of like, okay, I'm going to accumulate. Things are down. And then same thing here. We're coming up on, right? And then so what you can actually do another trend line right here, right? I'm going to draw another trend line, and there's confluence here, guys. There's confluence in many different ways, right? Touch point here, touch point all throughout here, touch point here. Now we're coming, right? There's a lot of people who I'm telling you, it's a lot of small investors that are now just finally going to start try to come in and FOMO into the market. And there's an opportunity. I'm sorry, not an opportunity. The unfortunate chance that they'll get whipsawed out, right? Because we can see these metrics, and then price may curl over in the next week or so. And then what do these people do? They go and sell. They lose their position, and then they say, "Man, investing is whack. I don't want to do it." And so you can see this macro trend line, and then this other trend line for this period, kind of coming to, like I said, this inflection point. And so, it's just pretty interesting to see, but that's what the whipsaws look like. And so, yes, there's this rally, but overall, it does not break these macro trend lines. And so this one here and here. So we're going to see if that happens. And so, that's just that. But nonetheless, right, the way that I see it, there is value here, right? Because if you look at it, and then so we'll turn all this stuff off, get rid of that, we'll get rid of that, and we'll, shut this down for the moment. We'll shut this down. And so, as you can see, this retracement on this asset, Bitcoin, it retraced pretty heavily, 74%. And then now there's been a little bit of recovery. And then so that recovery from that bottom has been pretty nice. And then so to where we are today, it's still on a severe discount, 65% discount. And yeah, this, could be the whipsaw for us to go a little bit lower. And then so I guess the question is, well, what could that look like? And so I'm going to bring that up again. We're spending a lot of time on Bitcoin today, guys, because, this is, what leads crypto. And so we're going to go and let's look at the major support levels. And so what I'm going to do, I'm going to delete this for now. I'll put it back here in a second. But for now, we're going to look at this area here. And so as we can see, right, we have this, there was a demand zone here, right? Anytime there's a demand zone, you see price action, get attracted to it, and we stay here for some time. So for example, during this time, this was a demand zone, right? We had demand zone here, we had demand zone here. And I'll show up the volume profile, and we can see that there as well. And then the next demand zone of where people say, hey, I'm willing to buy this asset, and where they've stepped in the past, and where people are currently still holding, is this area here, this 12,000 to 10,000 BTC range. And so, if we were to look at a macro view for that to happen, that very well could happen to line up with other bear markets. And then so, that would be us retracing pretty nicely. So going from the COVID low on down, right, getting to that 13K, that would be right to that, the 85% retracement for this move, going from 3,800 to 69,000. 85% retracement would be right there. And that's kind of right on top of where that demand kind of comes in. And we can see that because we can look across time, right? And so let's get this fib retracement out the way. And we could see that because we see this resistance here, here, here. See the support here, see the resistance here, here. So all of this area is data that we can use. And then so why this mid demand zone kind of bottomed out right here, people are like, well, why did that happen? Well, psychologically, right here, there was a little bit of support, right? And then so, that's why we had this mid demand zone. But also you can confirm that by looking at the VPVR. And so, as we can see, right now, this is a lot of price action here, right? A lot of price action. But as you can see, there is a ginormous ledge, right? That's why there's a heavy demand. I would really have a hard time seeing Bitcoin go below 10K. I have a tough time seeing it, stay below 12K for a long time. I think there is a capability and possibility if more macro things happen with the stock market, with things across the way, right? That we could see something. Hold on here. Let me see if I got something going on with this camera. Let's see here. No, we're good. All right, cool. So let's get back to it. So I think that there's a good chance that if we continue to have these rate hikes and if these companies don't perform and stuff like that, and if we do see some things change, and get a little bit worse from an economy standpoint, maybe they come out and say, hey, we have a recession. Yeah, I could see this relief rally coming and then us going back down to the next demand zone. And so this is just the ebbs and flow of a bear market, but that would line up with a lot of these other bear markets on how they go. And so, these are the levels that we're looking at. We're looking at, some resistance here at like this 24, 25K range. But if we get bullish, we can come up to that 7 and some change range. But there's going to be a big resistance there. And then on the downside for the months to come, right, there's a possibility of where the demand could be right here at this $12,000 to $10,000 range. And then so price, may shuffle around, right? But things could go there, and that's the short version of what I just did the last 30 minutes of explaining. So now I do want to take a look at some things here on Glassnode, some on-chain data I still think is still relevant. And for me, it's just using this as an idea to say where's value. And so we'll talk about relative price, realized price. That's basically the cost basis. So the average price of where people have bought in Bitcoin and exchange hands through time. And then so the interesting thing is, as we see this metric, here in green, this is the time periods where, price has gone below realized price. And as you can see, this is not all the time. More time than often, it is above the realized price. So, this is, like I said, for me, I see value even with the macro saying, hey, we could go a little bit lower. I still see value because if you just run the math, right, and you just look at the time, there's a percentage of time, even if the price does go lower, the percentage of time below the realized price is well below what the price above it is. And so for me, that risk reward is extremely high. So I'll take that. And then so, yes, like I said, I'm accumulating slowly with a price below the realized price. And so, but as we kind of look at that, as we see this metric, it kind of does this stair step. And so we can see right here in orange, the amount of time this is stair stepping up saying, hey, this is below realized price. Same thing here, below realized price. And then so that coincides with this green area here, a little blip for COVID. So if you caught it, you caught it, right? And the same thing here if we zoom in. So let's zoom in a little tighter. And so we just crept back above it. So that's interesting. So there was opportunity here, right, below it that we've had. And we'll see if we go back below it or if we stay above it for some time. And so, this is, like I said, this is value in my opinion. So the realized price currently, if we look at it to today's date, is $21,934. And so we have crept above it, like how we're seeing, getting closer to that 24K. And so, this is pretty interesting. And same thing here. So the NVRV ratio aligned with the realized price. And so this metric tracks when the ratio has gone negative and we're below realized price. And same thing here with the data, very small time periods, in the macro perspective. So upon the years, we spend time below both of those metrics. And then so same thing here. Now, not just realized price, but the MVRV, we're below that as well, being more favorable for us saying, hey, acquiring Bitcoin and acquiring crypto that we think can make it long term would more often be a good idea to do so versus when we are peaked up, at these higher levels, right? And then so same thing, the bull markets, we can see the acceleration and the constant incline, right, of both of these going above the metrics, right? So I'm talking about price going above both metrics. So we can see that build up. COVID kind of put a little damper, in this cycle here. The same thing here. You see the build up, then going off. And then this is why, this move from 30K to 69K was just a big, I'd say a big divergence that was really a big fake out, for a lot of people. And like I said, even myself, I accumulated some during this time, not too much, but I really took advantage of this, that last summer in 2021, right? And, and luckily I was able to take some profits here on the back end of December. I didn't get the quite top exactly in late November, but I got a nice, pull out for, some of my profits in December. And like I said, I've been slowly allocating some of that back here at these lower price points, accumulating more crypto that I just want for the long term. But nonetheless, going back into the topic is just looking at these metrics and using them to our advantage. And then so the alert for the idea is the NVRV breakout above 1 will signal the price is breaking above the realized price, suggesting potential market strength. And then so what that'll look like is this metric going from pink back to orange, and we're kind of seeing that as the days may go on. And then so this one's pretty cool. So this is some price models, and so it's kind of hard to see when we're fully zoomed out, but we have the balance price, the realized price, the one that we've been talking about, and then the delta price. So we're going to really hone in, and I'm going to explain what this delta price is. And so it is a hybrid. So as we read, delta price is a form of half fundamental, half technical. So putting both together, and this is a hybrid pricing model. It is calculated as the difference between the realized price and the all-time average price, because those are two different things. The delta price has previously caught the bottom wicks of bear market, so the bottom wicks. So let's kind of zoom in, and then we'll just go from 2015. So we'll take the last two cycles into where we are today, so we can get a better idea. And then so the delta price is like this dark brown one right here at the bottom. It's kind of like a beige color. And so the realized price is right here in orange, and then the balance price is this pink one here. And then so as we can see, right, like they said, this delta price has caught the wicks, because if you notice, in bear markets, we don't like this bottom price. We don't always stick around all the time. It's normally just a wick, like a week, maybe two if we're lucky. And so where we can really getting close down to it. But on that particular day, it's really just like a day or two when we wick down. But being below this balance price, like I said, is really maybe only like a week or two. And so the thing is, what do we notice is that accumulation zone. And so the accumulation zone, what do we see? Is really spent a lot of that time between the realized price and the balance price. And then so you see it peter up and down between it here for this cycle. And then same thing here for this cycle back in 2019, that accumulation zone right here going between the realized and the balance price, but we did have that small wick down to that delta price. And so that's something where, hey, we may be looking for that wick still to align similarly. Now, I'm not saying it has to happen, but with the macro things kind of happening externally outside of crypto, there is a chance. So I'm not going to write it off. And then so if we look today where that delta price is, we see it kind of going and trending lower. And then so we can see that delta price is $14,000. And you best believe if price trends down going towards it, this metric will move down. So as you can see, it's not staying stagnant, staying straight, right? Because the delta price was at 17K, it's moving down. So what does that say? That all sums up with what we're seeing from a technical side, and even from a sentiment side too, right? Because if we go back to it, right, we are at the worst sentiment level across all markets since 2008. And so that would lead into, maybe tapping that delta price. And with that metric heading down, so let's get back to it. With that metric heading down, yeah, that can coincide with that 12K, 13K Bitcoin. And for me, as I'm putting all this information together, that's where I'm really going to, like, I definitely would be saying, hey, I'm willing to pile in pretty heavily and the same thing. I'm gonna dollar cost average, but the sums of capital that I'm gonna use are gonna be larger than to what I'm doing today. But nonetheless, I'm still allocating today. And so, that's, how we're looking at this here. And so Glassnode is great. Really got these models to kind of help us, right, understand, what are things that are going on chain. And so, I'll leave that there for now. So, like I said, another thing to take note of, 26th and 27th, couple days to look out for markets overall. And so I may do a live stream on this day so we could all watch live and see what the interest rate hike is going to be. And so be on the lookout for that. And then yeah, guys, like, we'll check the M&Q one last time, and we're kind of settling. And so let's go back and let's look at the 30-minute chart here. And so let's do this. Okay, so boom, we're back up on the hunt. And so we'll see through the next hour or so. And, I'm going to be tracking it. If y'all want, y'all can go over to TradingView, type in M&Q and track it yourselves as well. But we'll see if this top can be broken, because if so, there may be a good chance things can be moving up here. And then so across the markets, what are we seeing? We're seeing some green. So the NASDAQ opening up stronger than the S&P, with a little bit more than half a percentage up. Apple's up, Netflix is coming up hot, it's up. And then same thing, commodities are down. So this is what we want to see. We want to see oil. So let's click on that. So we're seeing oil kind of come down, and that's a good thing, right? So we had a gap here, right? So we'll see. Maybe that may be filled if things get bullish for oil, but we want to see this metric go down. So we'll look at this on the daily chart. And so we've seen a nice double peak for oil. Now it's coming down, and we could see this having no problem coming back down to this range here for about $80 a barrel for crude oil, give or take $80 to $85, somewhere in there. And so, this is something interesting to see. We'll kind of go down our yields. So the government bond yields, the 10-year, right, it's still producing less yield than the 2-year. So that inversion is still in play, which normally signals a recession, but we've seen a peak there. And so it's been shuffling the last couple of days, but we want to see same thing, this metric go down to get back in line with its 40-year trend. So if we put this on a weekly scale, right, and we've seen this thing is in a 40-year trend of where this yield has consistently through time been less and less and less through the years. And then so we kind of peaked out, right? But what we do want to see is things kind of come back down, back into normalcy. And so, but for that to happen, we need inflation to go down. And then at some point, the Fed start to cut rates. And that means let's go easement back on. And then so, like I said, because you can see the 2-year is higher, right? So that 2-year is higher at 3.2%. The 10-year is at 2.9%. So that is what we call inversion on the yield spread. And then so same thing here, what I'm looking at, and I'm getting hopefully, for me, the way that I think about it, I don't like hopium and spewing it out. I say what I personally feel. And so for me, kind of looking at the data, I really think that we do have a good chance of not seeing the Fed do the full rate hike. That's what I truly, honestly believe. And I may be wrong about that, but just kind of seeing how things are going, if they continue to do that, there's some things fundamentally with the amount of debt that they have to pay every single month that will start to break, and things are going to be too expensive for them to do so if they start raking these interest rates to where they are, because these bond rates are a leading indicator of where interest rates can go to. And then so they say they want to get to 3.6, but the bond rates aren't showing that. They're tipping out or topping out at 3.2. So with that being said, maybe one or two more hikes, if we get a 75% basis point or even 100% basis points, that'll get us close to this 3% range, right? And so now I really have a hard time seeing us go fully to that 3.775 of where they're saying they want to be by the end of the year for the Fed rate. And so this is curling over. But the biggest thing is, right, looking at these moving averages here. And then so what I want to do here is really have a chance to look and kind of see, we haven't had a bullishness on this rate since 1993. And then what did we see? We played around with it for some time, right? And that's the thing here. Like, do not be surprised if we have somewhat of a relaxation, right? And this is like, we're just going to look and see how the data comes through. But nonetheless, when it decides to come down, it comes down very heavily and quick and swift. And so when that happens, best believe risk assets, they're going to fly. So whether that is now in, late 2022, I don't know. I'm really not seeing that. Maybe in 2023, maybe 2024. But whenever it does happen, like here, there's going to be a big rush. Things are going to fly. Because like I said, I'm going to use this all the time, just like a wave. When things rush in real quickly, they got to rush back down with the same type of velocity. And so same thing here. You see this velocity here, the velocity coming back down. So those cuts, right? So the yield for these bonds are going to go down. The Fed's going to start cutting at some point, whenever that may be. Expect these asset prices to go, flying to the upside. So what we want to do, we want to get the bottoms of the asset prices relatively. Don't have to snipe, but we want to get a good portion of our money allocated at the lower portions before things start to rip. And these are face melting rallies, right? Bull markets. And that's how the money is made. And so looking at all these metrics kind of help us sum up that stuff. And so back to Bitcoin for one last little peek. And this is the weekly scale. And this is a nice candle. It's nice to see. And we'll see if it continues. And so that's all I got for you guys. There's a nice little stream, not too long, but boom. I'm looking forward to, diving into some more info with y'all in the next one. So let's see who I got. I think I got one person still on the stream. I appreciate you, Trooper. I know everybody's got things to do, so don't want this to be too long. So cool. Thanks for the knowledge. You're welcome. I'm trying to do my best to make this stuff digestible for you guys. And as always, hope you guys are doing well. So smash that like button on the way out if you haven't. And I appreciate you guys. So see you next time.